What's up, everybody? Hey. Good to see everyone today. What's up, Tate? What's up, Jim? What's up, Robel? What's up, Ethan? Good afternoon, Kevin and Liam and Dylan, Tobias and Brian, and everybody else who doesn't want to say hello, but I know you're listening anyway. Hello. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer, and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same, but I'm not in AGQ. Otherwise, it's the same. Everything else is the same. Okay. Another crazy one. A lot of today was actually boring. I think all the excitement really came pre-market and in the last hour, but that was enough. That was enough. SPY's up 0.25% here at the close. The Qs are up 0.3 with well off highs. The IWM is up 0.9. So it's a complete flip from where we were in the morning meeting. If you guys remember in the morning meeting, the Qs were up a percentage point and the IWM was up 0.09. So pretty much a complete flip. TLT's flat. The dollar was up today, which is notable because they can sometimes apply some pressure onto commodities. Oil was down. Gold was down. And silver was down a percentage point, but that was one heck of a comeback from silver today. And crypto, down a little more than you'd want to see. Not broken on this daily chart, though. The IBIT chart's still intact here, but a 2.5% pullback there. And Ethereum down 2 3/4. And Solana, I don't even know why I look at Solana. Solana down 4.3% into the 80 MA on the daily chart. So pretty big percentage pullback in crypto, but the charts are still intact. It's after a 3-day move. Ideally, you don't want to see this IBIT chart get back below that like 53.75 to 54 that it broke out from. So if one wants to base in that area, let the 80 MA catch up, that would be fine and healthy. But a decent pullback all the same. From a market perspective, again, all the action was pre-market and in the last hour is what it seemed like. We had a very large gap today, and it came from Taiwan Semiconductors. The Taiwan Semiconductors is, in my opinion, the first important report of this earnings season so far. Yes, we've had the banks, and yes, I do think that the banks are important, the big banks, because they give you a glimpse into just kind of how the overall economy and the consumer are actually doing. But, you know, from a market and trading perspective, Taiwan Semiconductors is the first really important one because it moves around all of the semiconductor names. And the TSM report was very good. I think they beat on pretty much every metric. The thing that was most discussed on that TSM report was the CapEx spend that came in above expectations. So every number above expectations, profit, revenue, I think the guidance was great. So the stock is up an appropriate amount today. But the interesting part about it, and we discussed this a little bit in the morning meeting, was the increase in the CapEx spend. Now, they're like a supplier, they're a manufacturer, so it's not the same as when we see Meta increase their CapEx. And what we have started to see over the course of the last earnings season or so, and you can really see it with Oracle and Meta, where they're not rewarding you in the same way for just blindly spending on AI. You need to be showing that there's a plan. You need to be showing that there's a plan that's going to lead to revenue. And Google seems to be winning on that front. And you can see that in the difference between the charts when you look at Meta versus Google versus Oracle. But again, Taiwan Semiconductors, them increasing their CapEx isn't the same because they're increasing their CapEx because the demand is so high. But Billy D mentioned in the morning meeting this morning, and there was some commentary from the Taiwan Semiconductor CEO that really was emphasizing, you know, we did our diligence. We really want to make sure that if we're going to increase our capex, which means that we're going to be trying to increase our capacity to manufacture the things that our customers want, that, you know, what NVIDIA wants, what Meta wants, that, you know, that the demand will actually be there before we spend the money. So I agree. The commentary from the CEO, I thought, sounded a little bit nervous, but they're going to do it because the demand is there. And it's not necessarily a bad thing because, like I said, if the demand is there, then the revenue is there. The only concern, I guess, would be that if the demand falls off, because it's going to take them a lot of time to be able to build out whatever facilities they need to build in order to increase their production. And maybe a year or two from now, when that's all built out, if, circling back to the bigger picture here, the revenue generation isn't there from AI, then the demand will fall down throughout the scale. So Taiwan Semiconductor's increasing their capex spend, but even though they manufacture for their customers, they have their customer of other companies as well. The customers that, and again, I'm not an expert in semiconductors. Without a doubt, some of you guys know more than I do, but they have to get their production from companies like ASML that like make the, I don't know, manufacturing building blocks that Taiwan Semiconductor utilizes to be able to build the chips that then go to all those other companies for the AI. So it was interesting to see that. Let's see what the percentages are right now. Taiwan Semiconductor's closed up 4.5%. You've got like ASML and some of these others were up even more than Taiwan Semiconductor's was, and it's still that way. ASML is up 5.6% today. What's LRCX doing? LRCX is up 4.5% today. So when you go through a lot of the semiconductors, what's so interesting about the TSM report and what makes it so important is just the read-through effect on everything, from the companies that supply Taiwan Semiconductors to the companies that Taiwan Semiconductors supplies. And what you see here is that Taiwan Semiconductor's report was a combination of so good, which means that the demand is high and they're doing really well, but also that they're increasing their capex spend, that it gave a shot in the arm to the semiconductor space pretty much all the way across the board throughout the entire kind of supply chain, if you want to call it that way. So everything was up, and some of these names were up even more than TSM was. And the question in the morning meeting today, and I don't like to trade TSM, it's not my favorite trading vehicle, but the question in the morning meeting today was, all right, it's gapping up a lot, as it should, it's a great report. Do they hit this down a little bit off this gap up, off of some of the concerns that seem to be echoed from some of the CEO's commentary, and do they actually hit this down on the capex spend a little bit or not? And at the end of the day, honestly, I think that the question's still up in the air, because this is just a big doji here. Yeah, they sold it off of the high, but it's not like they filled this down and filled the gap. They closed it kind of weak, but it's not like they, filled the gap today and sold this all the way down like we've seen other names like AMD and NVIDIA do in recent earnings reports, where they report really good reports and then they sell it all the way down because it was overly priced into the stock. So TSM held up, but it's interesting when you look at like SMH and you look at the daily candle here on this SMH. So technically, big picture I'm bullish on this for sure, but small picture, I thought that there was a short trade here just a couple trading sessions ago off of this shooting star to see a little bit of a pullback, and I thought that if the semis pull back, I'm just rehashing previous meetings now, I thought that if the semis pull back, it could potentially impact the Qs and the SPYs, but the Qs and the SPYs are still bullish, they're still above support, etc. We got that pullback yesterday. We had a lot of weakness, particularly in the Qs, up until 3 o'clock yesterday for most of the day. And then in the afternoon, we rallied, and that's why we had this little bit of a downside tail. And then the Taiwan Semiconductors report was so good that they gapped it above that tail high. That is most likely very bullish unless you get kind of an immediate failure back down. At the end of the day here, SMH closed on lows, and I do think it's notable, but it's not like it traded back through this previous, I assume, all-time high of 396.10. It didn't quite get there, but it got close. So we'll see what happens tomorrow. If they were to continue to sell these semiconductors down and get them back below that previous low, sorry, that previous high, then you're maybe seeing a little bit of a failure in the space. But I think it's too early to call that. It's a very bullish chart. It gapped up a little bit. They sold it off a little bit. It's not necessarily the end of the world. You only have a bigger picture problem in this thing at this point, I think, if it loses yesterday's low, which at this point is still very far away. So that's kind of the semis, which were so important in this market. Switching back over to the market, we gapped up this morning, and we spent all day digesting it. We went through this exercise off the open today about gap extension, time price correction, how that works. And honestly, this was a pretty strong time correction. We gapped up. I was saying in the morning meeting today, like, we'll see if these semiconductors can go and lead this market higher to break out, but we don't chase gaps. We don't chase gaps. Chasing gaps once in a while maybe can give you like a good momentum trade if you keep a very, very tight stop loss if you're a momentum style trader. But if you're slightly bigger picture than just a pure momentum trade where you're scalping to the long side when you see the upside momentum come in with a very, very tight stop, if you're even slightly bigger picture than that, where you're even like a chart pattern trader on just a 5-minute chart, you don't want to be chasing gaps really in either direction, with rare exception. And there are some exceptions like breakaway gaps, but that's a rare exception. Most of the time, if you want to be long after a large gap, you need gap up, you need to be patient and let the upside extension get satisfied through price or through time. So we had a large gap up this morning, and guess what? We were going sideways all morning. But if you were like a pure momentum trader, I remember even noting this pivot on the third bar here, particularly I guess it was in the second bar on the Qs. And I was like, guys, you could try to be long off that low, but that's like way too shallow of a pullback for me considering this extension. That trade usually doesn't work unless some real momentum comes in. And yes, since we're moving on like a news event with Taiwan Semiconductors, there is a possibility that this low holds and momentum comes in and this really begins to break to the upside. But it's not a trade that I like, because even when it works, even when eventually we go higher, you shake out that low very, very often. And then next thing you know, 15 minutes later, we're shaking out that low. And this pivot was a little bit more interesting because now that ADMA is starting to catch up in the Qs and the SPYs, there's a deeper pull. So the ADMA was almost there. On this low, the SPYs held, but on the Qs, they broke a new low and actually touched that ADMA for the first time. Now, finally, at 10:05, you've had a full 40-minute time correction to satisfy a 1% gap up in the NASDAQ, and you're getting a touch of the ADMA for the first time. This is when the NASDAQ has the opportunity to go, but it's got kind of a short time frame window to be able to do that. Because right now it's 10:05, and keep in mind, by 10, it's kind of a range between like 10:20 to 10:45-ish. Which, right now it's 10:05, we got some time, but within, starting as early as 15 minutes from now, the 15-minute chart extension is going to come into play. So bulls have an opportunity here right now, a small time window, where they can really try to bring this higher, break new highs, begin an uptrend, and then have these moving averages chase higher, so that when that 15-minute correction inevitably does happen, it's happening at a much higher like equilibrium zone for that 15-minute chart. But we couldn't really go. We stayed kind of heavy, and I was noting that. I was like, we're not really going. We're staying kind of heavy. We're applying some pressure on the ADMA. And then next thing I know, it's like 10:30 or 10:20, and I'm like, all right, well now most likely this 15-minute time frame extension needs to be satisfied in order to go. And I've got a weird fake print here in the Qs, so I'll go over to the SPYs. What candle is this? 10:45. Yeah, that's the pullback at 10:45. So we are looking at like 10:30 here. We failed to go on the 5-minute catch up at 10:05, and now by 10:30 it's like, all right, well, we're trading at I don't know, 694 spot 70 with the ADMA on the 15 that's still down at 692, and the same thing applies. Maybe a little bit higher than 692. I think I just misread that. No, 692, 692.50. Same thing applies. Now, because it's 10:30, we need the 15-minute time price correction. And then eventually you got that. You got that with this quick pull to new lows right into the 21 EMA. And then this was, once again, a really important spot for the market. And we're looking at this spot and we're saying, like, okay, we've got our full 15-minute time frame correction in a good, strong market here. Now maybe bulls can take over and they can bring us up to highs. But if we really pull much further, this is starting to look like a failure. Not just a time correction, price correction anymore that can lead to bullish continuation, but if we go down much further, it's going to start to really look like a failure to me. And all of a sudden we got a headline. Trump was speaking. I don't even remember what he said. Oh yeah, he said something that I did not think should boost the market at all, but it appeared to. It could have been that the market technically wanted to move higher already anyway, and then the commentary came out. But he basically came out and said something about, like, it's not fair that the EU fines the U.S. companies so much for violating their rules when they're doing business in the EU. It's just crazy. But, we boosted up off that. And now it's like, okay, bulls look like they're intact again. 15-minute time frame correction, and now we're going, and next thing you know, new highs are coming in, and we're kind of going into one of those upside grinds. And then you're thinking, okay, maybe that's it. We pull back a little bit. Midday price action's tough. A lot of times you just consolidate midday. Seems to be what's going on here. And then in the last, really the last hour, or I guess it was kind of the last 2 hours to some degree with the SPYs, we actually really began to roll down and to actually sell off. And that was interesting because now this actually became more of a failure of that upside move by the end of the day. And that's why at the end of the day, when you look at this daily candle, the SPYs and the Qs, I'm going to describe them as concerning. We're still above key support levels. There's nothing broken technically about this market. And it's funny because I remember earlier in the day, very early on, like around 10 a.m. or so, I was discussing with someone here in the VTF when I was on the radio, and I was saying, like, well, if we were to correct and then, fail at the 15 and then fully correct and then sell down and fill the gap, you could actually potentially look at like a bearish engulfing Maribozu that could come in. But I'm not going to call for that. I'm just throwing out possibilities of how the market can work for kind of educational purposes. And at the end of the day, we did not get that. It's not a bearish engulfing Maribozu candlestick. If we sold off a bit further, it could have become that, but it's not. But it's still, I want to shy away from using that term that we use, which is actually taking on some pretty technical significance when we say it's a day to take notice of, or a penalty box candle. I'm not going to quite call it that. Definitely not for the SPYs. For the Qs, it's like kind of close. But we gotta see if this kind of turns into anything or not. We are now at mid-January. Tomorrow is OPEX, January OPEX. If you go back to December, like a lot of times the way that I approach the market is I'm looking out a couple months ahead of time, like 1 to 3 months ahead of where we're at, but I'm modifying the thought process of what I think the market can look like 1 to 3 months out on a day-to-day basis as the technicals change, as the market dynamic information updates, as the news adjusts. And if you go back to December, at that time, a month ago when I was looking out, I was kind of giving like two spots, like mid-January and mid-February as two potential spots for the market to get a little bit weaker and become a little bit more bearish. As the time has evolved, I've modified that with more conviction towards the mid-February point. And it seems to be confirmed a little bit by Scott Rubner, who is one of my favorite two analysts, who I have a ton of respect for. And it's also interesting because he tends to be super bullish. But he's already said I'm going to come out with my first bearish note of the year, in the second week of February, and that's kind of been aligned with my head. But I can't help but look at the QQQ candle closing on lows today. Honestly, the SMH candle closing on lows today, but it's definitely too early to overly drive anything from that. And wonder if that original thought process I had back in December of mid-January, taking on some more bearish possibilities, is actually still a little bit more of a still a little bit more of a possibility. So I want to see over the course of the next couple trading sessions if this turns into us losing any support levels or not. We have been in a consolidation, and I would describe it as a bullish consolidation. It's right in front of all-time highs, but I kind of think that we should be higher a little bit by now, especially in the SPYs and the Qs. Not so much the IWM. The IWM, look at this. Look at this Russell. It's a monster. They are still rotating out of Mag 7 into small caps, into mid caps, into cyclicals, and extending this IWM further. The mega caps have just such a massive weighting on the SPYs and the Qs that it draws a little bit of a different picture, just because that's how market cap weighted indexes work. But you know, I'm curious to see if there's a possibility over the course of the next couple of days if today actually means anything, because otherwise I think that we should be higher. I think that we should be in a little bit more of a grind higher. I think that this should have been continuing higher. And fine, we pulled back a little bit yesterday, gave that tail, but then today we should be closing at 697 today. Honestly, we should be closing at 697 today, and we're not. And that's why I've got this little inkling in the back of my brain that, hey, maybe this is something I should be taking notice of, because one of my favorite signals in trading is when I think something should happen and it doesn't. And sometimes that can be meaningful for the other direction. And I do think that given the broader bullish technicals and market dynamics and my expectation that we should be grinding higher here through the month of January, and then you had a positive catalyst that should specifically impact the Qs and the stuff that's more market weighted to the upside, and they still sold the Q candle down and the SPY candle down, we should have closed at, again, 697, 698 today to continue this grind that has been going on in January, and we just didn't. And the fact that we didn't, I want to take note of that. So that's at the index level. Semiconductor is really important today. You know, the bank earnings were out. I'll be honest, I was so focused on silver and so focused on the semis that I hardly even looked at these. I know that they eventually bought Goldman Sachs and what was the other one that reported today? Was it Morgan Stanley? Goldman Sachs and Morgan Stanley higher. The reports looked fine to me. I could have seen that. I could see this candle happening. I could see this candle happening in reverse. And then the other big thing is just this silver trade, which is worth talking about here for a minute too. Wow. So silver. Some of us here in the VTF were on the VTF till like 7 p.m. plus yesterday, trading this SLV when the futures reopened at 6, and this pullback kind of occurred here, and then they bounced it back a little bit, and then we closed at 8 o'clock. But now, you know, Robinhood's got the 24-hour trading and stuff, and Tate showed a chart. This SLV traded down to $78 shortly after the after hours closed yesterday for the 24-hour market, and then by 4 a.m. it was trading back above 81. And then by the time I woke up and I logged in at right here at just before 5, and I still covered some because it was still down, but I was also like, man, this is disappointing. I wanted this to be $5 lower, but my gameplay I still had to cover some, so I covered some, and they bounced back, and then they started to hit this thing, you know, nicely back down here. Starting at 8 a.m. and we're back below 81, which has been an important level. We're testing this 80, and I'm like, okay, this could lead to something here. And then when they actually opened up the market at 9:30, all that silver did all day today was grind higher, which is incredibly impressive that it was able to do that after going parabolic like this. I still think that there's a possibility, which I think for so many market participants would be the most annoying possibility, that in like the intermediate term up here, silver begins to just go kind of sideways. everybody wants like, and even like the Bulls want, SLV 100, just continuation. The Bears want like the big negative Maribosa sell-off candle, which by the way I thought was a possibility today and we didn't get it. And after today, it's tough. We couldn't even correct down to the 80 MA on the daily chart. I guess technically we did it like 9:30 p.m. last night for people who have 24-hour trading. But we couldn't even technically correct down to the 80 MA on the daily chart when we actually had some sell momentum this morning from like 8 to 9 a.m. And a weak opening and a gap down. We still trended up all day today, which is incredibly impressive, and leads me to believe that there's a higher probability of actual sideways price action, which I feel like no one's really talking about, or very few people are talking about. Everyone seems to be talking about the bull case or the bear case, and my thought process is beginning to lean more towards like a sideways market for silver that eventually breaks down, but not in the way that anybody who's short wants it to happen. Like a big sideways market. Maybe we break yesterday's high, but maybe we just start ranging between like, I don't know, 78 and 90 or something like that for months. Remember what gold did off of this first parabolic move. Remember, gold had like basically two parabolic moves in 2024, and we eventually traded both of them. The first one, I remember us nailing pretty perfectly here into this up move, and then it gave that pullback, and then it started to do some digesty things. And I remember everyone was asking me about gold, like, when's gold gonna go? When's gold gonna go? When's gold gonna go? And I'm like, I think it's just gonna go sideways. Then this did from, again, if you get rid of the continuation here, if I zoom in, this was like a pretty parabolic move right here on gold. It's a pretty parabolic move. When they finally broke it, it turned into a 1, 2, 3, 4.5 month consolidation. 4.5 month massive bull wedge, by the way. And then guess what? We got long again. Shout out Bill K on the call out. It was really all him that got me in it. We got long again on the break of this wedge to the upside, and it exploded higher for a whole secondary parabolic move. When that parabolic move broke, before new highs came in, it was another 1, 2, 2.5 months of kind of consolidation within this range of this high and this low before it actually broke. I kind of think that there's a possibility that silver, and man, look at that chart when I scroll out. Look at how parabolic that is. I kind of think that there's a possibility that we actually end up getting like a big wedge here again between like, I don't know, 90 and 78 or something like that. And we go into that for a month or two. But then I actually would think that wedge breaks to the downside. I remember I was reading a research piece today that someone sent to me, and while I was reading that research piece on silver, and it was a good one, which I can try to summarize, a quote came into my brain from a really, really good commodities trader, very, very well-known commodities trader who's actually part of our group. He rarely says anything into the VTF, but I know he's often listening, especially in the morning meetings, and not really much in the afternoon meetings, but always in the morning meetings. Like, he's got some of you guys know him personally and probably know who he is, but he's got a hell of a reputation. And I remember speaking to him on the phone one time, and we were talking about commodities, and this is a while ago. This is before this has all happened with silver and gold recently. And with his experience with commodities, he said to me, we were just talking about commodities versus stocks, and he goes, commodities tend to be mean reverting. Like, you sometimes get big moves and big squeezes in the commodity space, but they tend to be mean reverting over time. And I was thinking about that when I was reading this research piece that was sent to me today that just talked about the supply and demand dynamic in silver right now. And that's what, again, everybody is talking about is what is kind of causing this move. And silver is used for a lot of things. I think somebody in the VTF, it might have been Josh, said something about like, what do you even use silver for anyway? But it's used in electric vehicles, which are increasing, right? There's more and more electric vehicles on the road. It's used in solar, which there's an increase in solar, especially in China, just because, especially with AI, we need as many resources for energy as we can possibly get. It's used in AI. It's obviously used in jewelry. So those are your use cases for silver. And again, some of those uses with some of those modern technologies, because like Josh said from his kid science project that he did recently, silver is a great conductor of electricity. So it is used in products for sure. So that is one aspect of the demand. And what I'm seeing Emily and Liam say here are both absolutely correct as well. Given what silver is doing, China's been restricting exports, and one of the sources of demand as well is as an inflation hedge. And Charlie McElligott goes into the attack on the central bank system in the United States and how that potentially leads to a loss in faith in the U.S. dollar and a loss in faith in the United States, which then leads to an additional bid for these metals. Those are Charlie McElligott's words, not mine, though I personally agree with him. So these are the multi-sources of silver demand that are coming in at the same time. But the research that I was reading today was talking about like they're overstating the demand on the electric cars. They're overstating the demand on the silver situation. And yeah, China is restricting exports of silver, but at the same time, you're seeing an increase in collateral required to be able to own silver, and that was like the big downtick that had happened back here at the end of December. And at the same time, China, which if anybody knows much about Chinese market history, China has a lot of history when it comes to basically bubbles. A lot of chasing of bubbles. We've seen that in the stock market in China, but even more so, I think that's happened in the commodity market as well. So the Chinese government is very well versed in these situations because it happens so many times. They've been issuing warnings to speculators to lay off on silver. So that actually really matters, because when the Chinese government says something, people listen. And if the Chinese government is saying like, hey, we want you guys to kind of lay off on, the speculative pop on silver and what you guys are doing to drive up the price, that actually matters. At the same time, so that's the demand side. The demand side for the products I listed might be overstated at this point. The demand side from the Chinese speculators might be overstated. I don't think that the demand, as the lack of trust in the United States and inflation is overstated, to be honest. But we're up massive in silver, hundreds of percents depending on what time frame you're looking at this point. And it is supply and demand. The higher the price, the more people are willing to sell and the less people are willing to buy. It's especially true with a commodity like this. But the other thing that is going to happen, but it's going to take time, is that more silver is going to come online. And that was the other thing that this research article was getting into, is they referenced a silver mine in Idaho. I'm in the state of Idaho right now. That's about to get restarted, and several other silver projects that are getting restarted, that are turning back on, that are increasing production. Why are they increasing production? Because the prices are higher, right? And the higher the price goes, the more incentive that producers have to pull silver out of the ground and to produce it. The more incentive that people have to take scrap silver and to be able to melt it down to create silver. So it takes time, exactly what Emily said here, in order to be able to do that. I don't think it's going to take years, though, because the ones that I was talking about, they're already running, or they were running and were turned off because the price of silver got depressed. So a lot of the infrastructure is already there. It just has to get turned on. So I think that that's not a multi-year process. I think it's a multi-month process. Circle all that thought process back to the actual chart itself of silver and what's going on here. And I think that that lends credence to the technical thought process that I was potentially just describing, where you might get a silver, and look, maybe we boost a little bit higher. I can't, I don't have a crystal ball. I can't read this stuff perfectly. But when you compare what we just did, gold to silver, where silver's at right now, everything we just discussed, I think a sideways market would actually make a lot of sense. Technically, by the way, that's bullish, right? That's a bull flag. It's a bull pennant that builds out. It is, going back to gold, if you guys remember, we bought this break here at the end of August, the beginning of September. We bought this break of gold for this move higher after a multi-month bull wedge got built out. You could build a multi-month bull wedge in silver. 1 to 6 months, I think, is very possible of sideways price action. But then, given those supply and demand dynamics, and I'll circle back to what I was saying earlier about the market, I like to think 1 to 3 months out ahead of time, but I change and adjust my thought process day to day as the new information presents itself. I think that that pattern could actually eventually lead to a failed move and a grind lower. And from a failed move can come a fast move and all that fun stuff as well. So we'll see how that actually plays out over time. But the silver trade is super interesting, and I can't find it anything but bullish that they bought the gap down today. The research report was written by someone named Rocky Fishman, who's a CFA. He's a founder and strategist of ASYM 500 LLC. So anyway, that's my kind of thoughts on silver. So it was a super interesting day between the market, between semiconductors, and between commodities, and that was 100% my focus. That's all I got. I'm happy to turn it over to you guys for questions. Scott Rubner. He works at Citadel. It's off Emily's question. From Dylan, when you get a chance, can you talk about selecting a median to enter a trade? I'm not really sure what that means. For example, with your SLV short, why did you choose I mean, what product? Why did you choose SLV and AGQ as opposed to going long ZSL? I'm long ZSL also, or short SIL, etc. Are there certain credentials related to volume, spread, correlation that have to be met for your selection? Used SLV as an example, but it's more of a broader question. Sure. So I described this a little bit in yesterday's afternoon meeting off of a question I think Eli asked about, like, how did you narrow down to the stocks that you like to trade when there's so many stocks that are out there or something like that. And I basically just talked about how, like, I don't like things that are too expensive with too wide spreads. I also don't like things that are too cheap, to be honest, either. I don't really like stuff that trades below $5. I really don't like stuff that trades below $1. I know I'm swinging a 50-cent stock right now. It's more of like a fundamental play than anything, but honestly, I hate it. I hate that thing that I'm swinging this GAME, GAME. It just my problem is it just doesn't move. But you know, it's I'm not in it to trade it. I'm in it kind of more as an investment from a fundamental perspective because one of my fundamental guys likes it. But I like stuff where he'll tell me he likes the fundamentals, and I can also trade it. The thing about this game is it's been sitting in a 5-cent range for the month that I've been in it, and I can't trade something that's in a 5-cent range. It's just too cheap. It doesn't move. So I like to find a happy balance between liquidity, volume, spreads, price. I don't like things that are too expensive as a general rule. So it's kind of what I'm thinking about when I'm thinking about which product to trade when you've got all of these ETFs and levered ETFs and 2x and 3x and reverse and everything else. So that's what I'm thinking about. And look, over the course of the last few days, SLV has been my main focus. But I have traded the ZSL, and I'm long a little bit of it right now. I have traded the AGQ, day traded it yesterday and made a few bucks on it. I day traded it 2 trading sessions ago, and I made a few bucks on it. Significantly more expensive ETF. I know Pat's been trading this one. I generally, even though I'm in the ZSL right now, do not like these. I don't like the reverse ETFs. And I don't like them, especially when they're this cheap. But I have a little bit of it anyway, just for exposure for a different vehicle with a slightly different game plan. You know, what you have to remember about levered ETFs is that they decay. So you're going to be fighting something that has a natural force to underperform the underlying asset. So if is AGQ 3x? Is AGQ 3x or 2x? I don't even remember. If AGQ is supposed to be 3x SLV, and over the course of the next 1 month, SLV goes up 10%, AGQ will not be up 30%. It'll be up 30% less some degree of decay from the levered ETF. So you have to remember that when you're choosing to trade a levered ETF. It underperforms over time based on volatility. And it's kind of just like a math thing, which you can Google on your own. I don't remember or want to dive into the specifics of how the math works behind it. I just know the result. But volatility reduces performance in levered ETFs. So, you know, generally speaking, I'm going to trade levered ETFs as more of a short-term vehicle, or like TQQQ is a $56 ETF. I love how this thing trades. I understand that this is going to decay a little bit over time, but I love how this trades compared to how QQQ trades dramatically. I mean, QQQ is a $600 ETF. TQQQ is a $50 ETF. I can take so much more size in this thing. I can be so much more maneuverable from a game planning perspective in the TQQQ, so that's why I prefer to trade that. If both QQQ and TQQQ are both $50 ETFs, then I might trade QQQ, but you'd be giving up on some movement and volatility that would come from the TQQQ by nature of it being levered. So more art than science, I think, Dylan, on the direct answer to your question on what I want to choose to trade, but it comes down to just understanding the profile of what I'm trading and spreads and price and everything else, and also just understanding that if I'm going to trade something that is levered, that it's going to decay over time. All right. From Brian, what level on SPY would you consider to be a significant breakdown? Right now, 680 is the big spot that I'm watching on the downside. The bigger CTA trigger that I had last seen is down at 67.43, which is a little bit above the December low. So that would probably be like 173.50 if I had to guess. So, sorry, 673.50. So 680 is the first big technical spot. And then I think if you were to break 673 like 50, you could force an unwind of systematics, which would then lead to a significantly larger sell. I've been thinking that's more of a February story because that systematic number will continue to move higher over time as well. From Ethan, related to the gap today, I was looking at Amazon long to continue higher off of a higher low. Yeah, Amazon this morning today, it was a weird day. These Mag 7s did not perform at all. It was the Qs being held up by semiconductors, and then semiconductors rolled over hard into the close. But like if you look at, in some ways Amazon was a little bit better. Like if you look at Microsoft traded terribly today. I guess Meta was okay and sideways, but Mag 7, even Google, which has been the best one on the daily chart, did not trade well today at all. And that's the rotation still into the IWM. You know, we need to be looking at that IWM for longs and names in the IWM, but not right now. Not right now. It's a little ahead of itself, I think. Anyway, You're looking for Amazon long to continue higher off of a higher low on the daily chart, I assume. It gapped up much smaller than the indices, and it was able to tail off of its EMAs quite early. I assume that means you're talking about the second 5-minute candle right here. I like the long off that second 5-minute candle, by the way. What I don't like about it, though, is where the market is, and we need to be looking at the market in conjunction with the stock at the same time. Looking at Amazon in a vacuum, I like the long off here. Looking at it not in a vacuum, which we never should, the SPYs and the Qs were still so extended at that time that I wouldn't love this long because I think that the market could push you out when the market has to correct further. Let me read the rest of your question. So you're looking at that, and then I was a bit hesitant due to the SPY and the Qs being extended. Perfect. For the best probability, would I still want to wait for the indices to price time correct? Yes. Was able to catch a smaller move but never got market up. Yeah. Yeah, pretty much exactly what you're saying, exactly as I just described. In a vacuum, I like this as a long, but we can't ever be in a vacuum as traders. You always need to be looking at the market, especially when you're trading something that's correlated to the market. And this is relatively weak, and the market was still extended. The market needs more time. Therefore, this is a much higher probability of failing, which it eventually did. I'm glad that if you took it, you were able to probably get a little bit off and get the risk covered in this small move. But those would all be layers of probability against the trade to the point where in a vacuum, I think it's a good trade. Not in a vacuum, I might not take it at all. Talking about the advantages of trading the futures versus the ETF. So I don't trade futures. So my answer to your question is going to be somewhat limited because I don't trade futures and just don't have the experience doing it. But first of all, from a charting perspective, it's the same thing. It's the same thing. QQQ, NQ, SLV, SIL, ES, SPY. The charts will move 1-to-1 with each other. So from a trading perspective, it's the exact same thing. The advantages of the future side is that you could trade all night if you're a psychopath and you don't like to sleep, which to me, I don't want that. The advantage of the future side for people in the retail world is also leverage. For us, that is tomato. If you're a trader with T3, you get so much leverage from the company that the amount of leverage you get to be able to trade QQQ is, doesn't matter. You don't need the natural leverage that's inherent in the futures product because I could go 20x in the QQQ if I could go 20x in a 3x levered ETF if I wanted to. So they trade 1-for-1. I don't think there's any advantage to necessarily trading one over the other outside of that the futures trade all night. And I do think that there's an advantage to being an equity trader over being a futures trader broadly, though. People who, exclusively trade futures because of the leverage that's inherent in the product, that I think they're missing out on. I would rather be an equity trader because the people who trade futures, they only trade a few products. They trade the indexes, they trade, maybe silver and gold, maybe oil. So, you got 2 to 6 things that you might trade as a futures trader. Sometimes I'm looking at the S&P and I have no advantage. And if all I trade is the S&P and the NASDAQ and I wake up and I have no advantage, I got nothing to trade, I have no way to make a living. But if you're an equity trader, then you got thousands of stocks, something got upgraded, something had an earnings report. So I think that, if you want to have access to both and have 2 accounts to be able to trade both because you might want to catch a move in the middle of the night, fine. But otherwise, I don't think that trading the futures has any advantage over trading prop equities. And if anything, it's a disadvantage because you have so many less products to be able to trade. But from a pure trading perspective, trading QQQ versus NQ in this given moment, there is no difference. From Kevin, is USAR too damaged to swing? No, it's still in its pattern. And what are your thoughts on the other rare earths? I'm short UUU. What are your thoughts on the rare earths? My thoughts on the rare earths. So there's like a sector of stock in my brain, like a lot of these meme names, quantum, rare earths, nuclear. I think that all those companies are basically worthless, honestly, or worth, and I'm using worth in air quotes here, significantly less than they're trading at. Which isn't to say that you can't go long on a great chart pattern because they can go higher. Um, so technically speaking, this USAR looks fine. It's still in its chart pattern. I don't want to see it get below 16. If it gets below 16, then I would have a problem with it, and I would say get out of the way. Today was an inside day. You want to see this thing start getting above 18 with some volume to continue. So technically, it's fully intact. But like I posted the news that was out on Quad U this morning that was giving it relative strength. They have, and there was nothing even new in this news. This is all old news, but they have an operation in Utah that has some rare earths in it. And the news today was if they can get a contract approval, government contract approval, regulatory approval, then they could begin to work in the middle of 2027. So I'm looking at a stock here with this Quad U that's got a $5 billion market cap on $70 million in revenue last year, whose business can maybe start in the middle of 2027. It's ridiculous. The thing is that these things don't trade on what they're worth. They don't trade on their value. They trade on if there's more buyers or sellers in it at any given moment at any given time. I've been short Quad U for a very, very long time. That's why I'm short this thing. I think that the chart patterns here are bullish. I've been short since this move here. So I rode it all the way down. I'm riding it all the way back up. I'm trading the hell out of it all the way everywhere in between. So that is, me with this name. And I'm giving back some P&L into this up move, and I'm fine with it. Uami was the other one that I was really short in a big way on the downside as well. RGTI, which I know is not rare earths, but RGTI, like, have you seen the picture of their office? It's like a dentist's office in New Jersey, and the lights aren't even on. It's ridiculous. Maybe somebody comes in and buys these companies out at a certain point, or maybe the biggest risk on being short rare earths is that the U.S. government comes in and takes a stake on them at some point, which now we apparently do that. USAR I think is still intact. I don't love the failed breakout from 2 days ago, but it held in great yesterday. Above 18, it'll start looking good. Below 16, it'll start looking bad. Quad U is the relative strength name. MP, I think, is the one with the best business for whatever that's worth. And MP looks okay also. And then USAR and Uami would be my least two favorite, like, dare I say, fundamentally. And then the other one is this UMAC, which what UMAC has going for it is Jared Kushner. No, not Jared Kushner. Is it Jared Kushner? Or is it Trump Jr.? One of them is involved, and, crony capitalism matters in this environment. He's also involved in ONDS, right? And ONDS gets all the contracts. The thing about UUU that makes me more comfortable about having this one, even though they're doing business in Utah, is they're a Canadian company. So I would be surprised if the government took a stake in the Canadian company. They could buy enough stock to be able to do that if they wanted to. And I'm sure that if they took a stake in any of them, that all of them will go up a lot on that day. But that's one of the reasons why this has been the one that I've kind of continued to press the short side, because I'm a little bit less concerned about that. Cool. From Jackie, what are your thoughts on trading a pool of stock sectors versus looking for names in play like earnings, news, and upgrades and downgrades, like you're just talking about? I know some traders who only like trading certain stocks and sectors, and others who like names with a catalyst and can trade new names every day as long as there's good liquidity. It is important to know the personality of the stock you're trading. So it can make it difficult when trading new names versus names you're familiar with. Any advice you can share is much appreciated. Yeah, I mean, I love trading names that I'm familiar with. I really do. I definitely get the in play theme. The best is when it's a name that I'm familiar with that's also in play. That I love. Um, so yeah. Um, I like it. I like where your head's at. I like the idea of trading sector ETFs also. I have enjoyed trading SMH and SOXL in some ways more than when I was specifically focused on Micron, Nvidia, AMD at certain points over the course of the last year. You get rid of some of the idiosyncratic news risk that can be stock specific. Obviously, you still have sector specific news that can impact it, which happened today and hurt me a little bit at a certain point today with this SOXL because of how big the gap was off the TSM report, which I knew that was a possibility. I knew Taiwan Semiconductor's report was important and could move the entire sector. But yeah, I think that answers the question. What are your thoughts on Amazon? Amazon's an inside day today. Mag 7's weak. Amazon is still intact as far as I'm concerned. I do not want to see it lose yesterday's low because then you're having an inside and down that probably would happen because of a market failure. So I think Amazon's okay as long as the market doesn't fail. Which after today's candle, like I said earlier, we got to keep an eye on that. Also, pretty much all these XLF names look smoked, including not Goldman and Morgan Stanley. The others do. I think an eventual pullback at XLF is viable still. I like the sector overall. You had a little bit of a hammer yesterday. Yeah, it's not a great upside tail today on XLF. A bunch of stuff over in the YouTube. JB. What's going on, JB? Thanks for today's breakdown, no problem. You mentioned the one-to-one kick in the past. Can you please explain that? Thanks in advance. Sure. So the one-to-one kick, what does that mean? I'll give you like a very simple example to show you how the concept works. You buy a stock at $20. You buy 1,000 shares. Your stop loss is at $19.90. Let's assume no slippage or anything like that. Let's keep it simple. So you buy 1,000 shares at 20, stop loss is at $19.90. If it goes down to $19.90, you lose $100. A one-to-one kick just means one reward for your risk metric for 50% of your position. So if you bought it at $20, 1,000 shares, you offer out 500 shares at $20.10. If it goes up to $20.10, you sell 500 shares, you still have 500 left. If now it goes back down to $19.90, you get stopped out, you end up break even on the trade. You made $50, you lost $50. You made 10 cents on 500 shares, you lost 10 cents on 500 shares. You're break even. The concept is that's a failed trade. And if you can be break even by having good execution on your failed trades, it circles back to something I said in another recent afternoon meeting about I love something I highly suggest. I found it fun, something I used to do a lot of in my career, where I would just take a blank spreadsheet, and just play with game planning numbers. Well, think about a scenario of 10 trades where you are consistently taking that one-to-one kick. You could have 6 of them fail, but they went up your risk amount first and you lose nothing on them. You could have let me change that. You could have 5 of them give you a one-to-one kick and then fail. You could have 2 of them go up 3-1 and then fail, where you took your one-to-one kick, you sold a little bit more, the trade fails, and you make a small amount of money. You have 1 of them that just completely fails and you lose your risk entirely. And then you have 1 of them that just 100% works. You're making money at the end of that. So you can just do scenario analysis of game plans where if I have this game plan where I'm taking this one-to-one kick, as soon as I get that one-to-one kick, I can be as greedy as hell and really go for big profit because I know that my worst case scenario is 0. So the idea is you're putting yourself in win-win situations consistently over time to try to make money. Hope that helps. From Cyril, the IWM is becoming a bit ridiculous, but I can't fight the trend. What setups would you watch? It looks like it's in play right now. Yeah, I just mentioned that briefly. I don't want to chase the IWM here. I'm not ready to short this yet either, though. This is where the money is getting rotated to. There's a reason behind it. This is a cyclical play. It's trading great. It's just a little bit too extended to chase. But it's definitely in play. If it were to if I can get like a couple more big up days in this thing, then I'll start to really look for a short. Maybe even one more big up day tomorrow on the IWM, and then a gap up on Monday. Then I'll begin to look for the short. That'll probably give me enough extension. But overall, that's the sector you want to be long, and they're rotating money out of the Nasdaq in order to buy it up. From Cyril, would you take the QQQ breakout trade from this massive tightening pattern we have on the daily? If it breaks, yeah. Again, I've been bullish on this market, but we can't break the level. We failed again at it today. So I like the breakout in the SPYs. I like the breakout in the Qs if it breaks out. And I like it even more now if it breaks out because it means it'd be negating today's candle. So if we're getting that 630 or whatever it is in the Qs tomorrow or Monday or Tuesday, then yeah, I think you should go for it. Or I'm not allowed to give trading advice specifically. I think that I should go for it. I don't want to be responsible for a loss on a failed trade. We all make our own decisions. From Giancarlo, when discussing continuation, does the ADMA need to catch up to the actual current trading price, or can the ADMA catch up to the lowest price of the previous close? The lowest price of the previous close is probably fine. It depends a little bit on the pattern. You know, if it's like a bull flag pattern, you just need to catch up to the base of the flag. It doesn't need to catch up to the candle that you're in. But if the last bar, if it just had a huge move higher on the last candle, and then the ADMA catches up to the previous candle, that's pretty far down now. But you don't need to touch the candle. You need to get to the base of price action, more generally speaking. In the VTF, Tate on XLP. XLP, oh man, I don't remember. Maybe you know. This XLP move is extremely notable. I've seen some statistics recently, and I don't know how good they are. I don't know how much they matter. That like this big of an XLP move in this short of a time frame leads to a bigger picture breakdown for the market. I think it might have coincided with the top of the tech bubble or something like that. I don't exactly remember what I read. I think I read it over the weekend. But yeah, the Qs being kind of weak today and selling semis down today. XLP doing this. Things are happening. Things are happening. All right, guys, it's 5:15. I'm starting to lose my voice when I talk too much. I'm going to wrap it up. Have a good night, everybody. See you all tomorrow. If you're in the YouTube, give me the thumbs up. Oh, fine, Scott, even though I already closed out the... Coin looks terrible. It's so disappointing given what Bitcoin's done these last few days. And coin had an upgrade or a price started increase, I think, one of these last couple of days. I didn't see this today. I do not like this coin candle today. Below 237 to 238, I would not want to be long this thing. Have a good night. See you guys. If you're in the YouTube, give me a thumbs up.